Unbiased Trading here, and today we're going to be going over my January review of trading small caps. So here's my calendar overview. I will warn you, this video is a bit more off the cuff. I will just be kind of talking about my experience this month, overall how my performance was, any small improvements or shortcomings that I had, and just a kind of a quick roundup video for the month. So as we can see, there was a lot more trades this month. It was pretty insane. It was a big shift. I didn't really change anything setup wise. I think there was just a lot more opportunity. Previously on month to month, I think I normally had about 14 or a bit less, normally like around 10 trades in the month. So this month was insane. I think we had about 19 or almost 20 trades in total. As you can see, each day I pretty much only had one trade. I think there's one day where I had two trades. And that is because of a new rule that I'll get into very soon with something I kind of experimented with. Now, here's the equity curve. We can see it's a pretty great equity curve for the month. I won't lie, like I'm pretty happy with this. And overall, the performance recently has been great. Keep in mind, this is smaller size. I've really kind of honed down the size that I think I can execute the best on. And now this year, my goal is to overall keep on adding size and kind of get to a point where I'm like happy with the returns, or at least like they're somewhat usable. Because right now they are more of a smaller size to be trading with. But overall, the performance at least looking great. Very happy. This is without locates and this is with commissions, but without locates because this is through TraderSync. However, it's somewhat similar, just a bit different with locates included. Now, comparing it to my system, if you were just going to do open to close on every single one of the trades, this is how the equity curve would look. So we can see we had a amazing run in the beginning of the month, which kind of makes sense. The beginning of the month was a huge amount of faders, really great plays. Middle of the month, bit of a drawdown, returned back up, and then kind of ended up to fade later in the month. Overall, with we've got MSGM, we've had some other huge runners. We've had the overall kind of AI news squeeze news, so that's been pretty insane to deal with. But I do not trade fully systematic. I am 80% systematic, 20% discretionary. So I normally don't take open to close unless it's on a particular ticker that has better opportunity cost or worse opportunity cost, and I should just enter in at open compared to like the overall bucket stats of my data set. So that does change from time to time. As you'll see, sometimes I enter on spikes, sometimes I enter at open. But overall, it's still a bit of a mix. Now, if we look at it just open to close with one trade day and the highest probability odd trade, for this current graph, this is just using the biggest gapper, as that's normally the biggest contributor to odds. However, pre-market volume and a couple others on my data set do change it as well. But we can see overall, we have way less returns, which is expected. We have a one trade a day. And also the big thing about this is like I prefer one trade a day at the moment because it means less volatility, less drawdown, and overall more predictable. And that is what I'm aiming for at the moment. I'm aiming for like lowest drawdown, just getting used to consistently trying to be profitable through the months. So that's kind of my overall main aim. And we can also see here that we kind of perform a bit better than if we just took every single trade from open to close, as we kind of recover at the end of the month, even with the tougher conditions of having more squeezes. And it's simply because we're taking the highest odds trade on the day. Now you also notice it is not perfect, like it's not the exact same, sorry, as my equity curve, and that is the reason for this is simply open to close. On some of those days I took spike entries, which got me overall better PNL or better exits, and also I do include trade management using probabilities over the day, which can help my profitability even more. Now, for improvements, this month, as I just mentioned, I've been trying out a lot of new ideas that I've back tested over my data sets and also done walk forward testing. And then with all this new volatility and new tickers, I thought it was kind of the best time to include those and try them out, because once we have a lot of tickers, I can get a better view of if it's performing to the median. And obviously, the biggest time for psychological effect is when you take something new and then for the first month, it has a really bad impact on your P&L or your overall profitability. And that isn't really a good enough amount of time, depending on the sample rate, of viewing if that addition is actually bad or if it's just an allowed kind of drawdown, and that's kind of expected to see over a long period of time. So I normally try and give around 3 months to 5 months. Like for my algo testing right now on futures, I've set it to be about 5 months of testing on micros, so I can see if it's kind of performing the same as what it has been historically, and also on my walk forward tests. So we can see if there's simply it does not apply to live conditions and there's something I'm missing, or if it's still, kind of like around the median and it is performing well. So that was kind of why this month I wanted to add those new additions, such as only taking one trade a day, which was the highest probability trade, because historically that's done really good and that's definitely smoothing out the equity curve over my data set. But obviously applying to real time conditions is a little different, and sometimes it can it cannot result in the historical performance anyway. So at least I'm happy this month that it didn't completely ruin my performance and overall still came out profitable. So I'm very happy with that. Also, a big thing this month was patience. I didn't really have to employ that much patience, but I did feel an overall calmness that if the market was just going to die off one week, I would have a lot of patience in reserve due to just previous months not taking really that many trades at all. Like normally there would be at least a week of where I only trade one ticker. So that kind of patience buildup that I've been training, I really felt here when I had so much opportunity. I felt more calm overall that I could just wait for setups. And luckily there was plentiful amount of setups, but it was a nice change, and I could definitely feel that in my trading. Um, and also, I'm really happy with when I started seeing more plays. I didn't like instantly oversize. I didn't get overconfident like my past self, and go into a big drawdown, at the end of the month with MSGM and other tickers. So I'm really happy about that, and I think overall that's kind of shown my improvements at trading. Now, for shortcomings, I had a lot of FOMO this month. I think this month, because there were so many opportunities, it felt like I was only capturing a very small bit, and I could have made so much more if I had, sized up, or if I had taken more plays. But overall, I'm pretty happy that I didn't take on that mindset and start executing that in my trading, except I just realized I had that feeling and I kind of kept it away, and I kept on talking like why that isn't sensible and why that's not rational for me to do at the moment. So that was a very good awareness. I was really happy with that. Also, I did notice kind of this month that I was calculating how big of a difference the different locate prices at different brokers would affect my P&L, using haslocate.com, which was made by Day Trading Zoo, he's an absolutely fabulous guy. So definitely check it out. But overall, I did see that like better brokers could definitely increase better profitability, or at least more profits. So it's something in the future that I might do is switch over to a better broker. It's just a bit different living in the UK and then sending over above PDT into like a US account or stuff like that. So maybe in the future, I definitely think very soon that might be a possibility and that might be a thing I do. I was also late on some plays, so I missed about 1.5 R, I think, on one trade recently. And that's quite a lot of R for me because on average, I'm about getting 1 to 1.2 R. So missing an extra 1.5 R is a huge deal. And I really need to make sure I'm not being late on plays next month. And the way I'm going to do this is by primarily just optimizing my scans to give me alerts faster, or using faster scanning methods or platforms such as doing like real time with Polygon or doing trade ideas, something like that. But overall, that is something like a thing I've noticed I need to improve on. And then as a little treat for the month stats, this is how they look. Feel free to take a screenshot, look over them. This is just everything above 20%, 1 million plus pre-market volume, price above one, and these are all the stats. So we can see this month was pretty good, and I can see why a lot of traders did great in small caps because we have about a 72% close red percentage. So that means, overall macro edge is really good. Obviously, open to higher day has quite a big standard deviation of 30%, obviously, because we've had some black swans or, sub black swans. And yeah, thank you for watching. And if you enjoyed, please like and share it with anyone else who might be interested.